Welcome back to Block TV. Time for Cryptonomics, where we look at the relation between the crypto market, the larger financial and political landscape. And to do that today, lucky girl that I am joined by eToro's senior analyst, none other than Mati Greenspan from Tel Aviv. Mati, great to have you with us.
What's up, Yael?
Oh, God, that's a great answer. Now, to start with, you and I are speaking a day after yet another crypto hearing on Capitol Hill yesterday before the Senate Banking Committee in D.C., where the sphere was represented by Jeremy Allaire, as the CEO, of course, of crypto exchange Circle. He faced less heat than David Marcus of Libra several weeks ago. Still, Senator Brian Schatz, Democrat out of Hawaii, posed some issues Allaire had trouble answering. Let's have a listen.
Do you really think that in a society in which only 81% of the public currently has a smartphone, that we're anywhere close to democratizing the use of these products? I mean, what it sounds like to me is tech people wanting to wave a wand and skip a bunch of steps and avoid the tough politics of doing things for people and saying, we've got a new tech that will solve all this stuff.
There is no silver bullet from technology. Very clearly. These are human issues, and they're real policy issues. I think the risks that we have to address in the financial system, whether it's access, criminal abuse, data security, privacy, those exist significantly.
There's Allaire, who famously moved his exchange or headquarters to Bermuda. We'll touch on that in a second. But throughout that hearing yesterday, was there any effect of those hearings on Bitcoin trading, on trading volume? What did it put a dent into it at all?
Yeah, so what I noticed actually was quite unique, that ahead of the hearings, we noticed reduced volumes across the industry. Wow. I was tracking Messari's real-time exchange data, which has been approximately $700–800 million traded on Bitcoin a day for the last week or two. Yesterday, before the hearing, for about 12 hours, that number had dropped to the low 600 millions. And then this morning, again, it's back up to 800 million. So what it does seem like is that some traders were waiting for that hearing in order to place their trades. Interesting.
Now, back to, as we said, not as heated and standoffish. It was pretty clear that, legislators have a long way to go. But, I think we can agree that on the Capitol Hill in the United States, they understand they cannot ban crypto. What was your take on the hearing yesterday?
Yeah, I think that was quite a comforting thought, that they understand the space enough to understand that a decentralized ledger, you cannot ban it completely, and nor would they even want to. What I thought about this hearing is that it was quite middle of the road. I mean, they had a balanced panel, right? One antagonist, one advocate, and one who was kind of neutral. And what it seems is that they are leaning towards common sense approach to regulation of the space. And I think that is a very good thing.
Entirely so. I think we're all wondering how fast will they move. When it comes to where we stand today, first of all, apropos of those hearings, putting that aside, though, there's a lot of talk, you and I are speaking today, where the Fed's decision to reduce interest rates is expected today in the next few hours. This will be, I believe, the fifth ever such reduced interest campaign by the Fed since 1995. Now, this affects the institutional markets, etc. Do we expect this to have an effect on the crypto market as well?
So that's an excellent question. So first of all, I want to just give a bit of a background on what's happening here. So here we can see the interest rate in the United States, since 1998. And what the Fed is usually supposed to do is that when times are good in the economy, is that they want to raise the interest rates. As you can see, they've done in 2005 till 2007. And then when times are tough, they lower interest rates. You can see during the financial crisis, they put interest rates on the floor. And the reason for that is that you want to promote business by reducing borrowing costs. You allow businesses to borrow, spend money and grow the economy like that.
I'm going to stop you for a second, because this is fascinating and true. Because what you're saying goes straight to my point of, why are they doing this now? Is the economy in bad shape?
No, absolutely not. Actually, that's what
Exactly.
I wanted to say. The economy is in a great shape right now. Unemployment in the United States is near the lowest it's ever been. Inflation is exactly where they want it. It's around 1.6 to 1.8%, which is right in their sweet spot. What's happening right now is that the Fed is receiving pressure from Donald Trump, who wants the interest rates lower because he believes that it's good for business, and B is the markets actually are demanding the Fed reduce interest rates because they believe that it's going to make the stocks go up. This move has been extremely highly criticized by economists across the board. Here we can see Guggenheim's Scott Minerd, who says that they're going the absolute wrong way. They should be raising the interest rates right now, not cutting them. I was reading a note from Howard Marks, beautiful note, and a wonderful economist that I really follow. And he was just basically saying what they're doing is they're artificially prolonging the expansion at the cost of the future, meaning that they're intervening in the economy. The economy generally goes through cycles of expansion and then recession. And what they're trying to do is they're trying to avoid the recession, put it off artificially, but that can come at a cost later on down the road.
And I want to touch on that cost because it's kind of like an insurance cut, right? It's basically, to minimize recession risks. What can happen though?
Exactly, and the narrative has actually changed, and they've been saying this word insurance cut. Economists have been saying insurance cut for a while. Actually, now what they're saying is that when they raised the rates back in December, maybe they got a little bit too aggressive, and now they need to come down a little bit. It's a lot of BS. The Fed is bowing to pressures either from the president or from the markets or from both, and simply doing the wrong move. In my humble opinion, this could very well be the biggest monetary policy mistake since the Great Depression.
Jesus. No, but I'm taking that and again, and I think, many people have said, as you said, that, this is coming as an administration request in many, many ways, maybe also, to try and prolong a certain situation. But we will see an effect of it. Do we think that, well, first of all, what do you think the effect will be? Let's divide it in the immediate future, let's say in the next week, because we haven't seen it really, putting a dent in anything, it's just to talk about it, on the markets, both institutionalized and crypto market.
Right. So when the Fed lowers interest rates, what they're basically doing is they're making more money available for investments. So investors can borrow money at a lower cost. They can then borrow more money in order to deploy it into capital markets. And that's going to affect the stocks. Usually stocks go up on an interest rate cut, commodities, you name it. And of course, that has a spillover effect onto Bitcoin because Bitcoin does not exist in a bubble, okay? It's basically a factor of the rest of the economy. So more money available means more money available also to the people on the street who can then deploy that into crypto assets. Now, to kind of highlight this, I've prepared this chart for you, which basically shows the price of the Dow Jones since beginning of 2017 is the orange line, and Bitcoin, the chart we know, is the blue line here. Now, I've actually had to play with the percentage, as you can see, two separate axes here, because obviously if we put them on the same chart, the Dow Jones would just be a flat line. It's gained about 37% since 2017, and Bitcoin has gained 1,132%. What I want to show here is 2017, the entire year from here to here. This is coming after a long period of Fed support, basically the central banks pumping money into the economy, and that affected all assets across the board. The gains in the stock market were tremendous, and we know very well the effect that it had on Bitcoin. 2018, around February, the Fed announced that they were going to raise their interest rates and started being less loose with their money. They're tightening up the economy, and the Dow Jones had an immediate reaction to that. 1,000 points in a single day. A week later, another 1,000 points plunge, extreme volatility. And we can see Bitcoin kind of mirroring this sentiment. they kept up that rhetoric and continued to say that they were tightening up until the end of 2018. Right at the beginning of 2019, however, they reversed course. This is actually the fastest course reversal for global central banks that I've ever seen. Is basically going from saying we want to hike rates twice next year to all of a sudden we want to cut rates twice this year. In the span of a few months. It makes my head spin quite serious. But you can see that the effect on the Dow Jones was quite immediate because they understood exactly what that means. It means more money for investments, and the Dow Jones made a full recovery by April. Bitcoin, however, of course, many crypto traders are not necessarily Fed watchers. They're not watching what the Federal Reserve is doing in order to try to forecast the price of Bitcoin, had a lagging effect. And as as the monetary policy and as the central banks continued talking about easing, we did see a rise in Bitcoin. Now, this I thought was an interesting tweet. Yes. Is that tomorrow Bitcoin will experience the first Fed rate cut in its history. So Bitcoin has only been around 10 years, so it's never actually seen a rate cut. As well. Anthony Pompliano, the great Bitcoin influencer, has also very recently put out an article about how the monetary policy of the European Central Bank could affect the price of Bitcoin over time. Now, this is something that I've been talking about for quite a while, but to see Anthony Pompliano talking about that, writing an entire blog explaining how economic stimulus is rocket fuel for Bitcoin, I believe that we're going to see a much more immediate reaction from Bitcoin this evening when the Federal Reserve does decide to cut their rates. Could be wrong. Of course, it's just a theory.
No. But first of all, if you're right, then you said it first here, which I love it. Or you've been taped first saying it here, so that's already one thing. But yes, they do tend to react, and as you said, we will probably know this in a few hours, as we mentioned, Federal Reserve cutting interest rates as expected today. Mati Greenspan, thank you so much for joining us today on Cryptonomics. We are BLOCKTV. We'll be right back.
For more news and updates, follow us on Twitter.